Good morning. Today's pre-market news. Should the market open gap up, one should be wondering what went wrong. Making an about turn from its tight money policy, RBI on Tuesday decided to infuse liquidity in the system after a sharp spike was witnessed. In the long-term yields in government bonds on Monday, RBI said it will buy long-dated government bonds worth Rs 8,000 crore through an open market operation on August 23rd and thereafter decide on the amount and frequency as warranted. RBI has decided that the rule to cut SLR bonds held in HTM book to 23% to be kept in abeyance, and banks can retain SLR bonds in HTM at 24.5% of net deposits. These measures should provide the much needed respite for bank stocks to bounce back with a vengeance. Short covering could push the indices even further higher, at least at start. Investors should be extra cautious at times like these and use any spurt to exit counters which have dimmer prospects in the current scenario. Amid rupee sliding below 64 to a dollar, Standard & Poor's said it will maintain negative outlook for the country as currency depreciation is adversely impacting investor confidence. In Parliament, it's disruption as usual. Instead of passing bills and discussing the implication of Food Security Act, both the houses saw acrimonious scenes over the missing files of coal scam. With the National Spot Exchange Limited failing to pay out Rs 174.72 crore to investors as scheduled, the NSEL board sacked its managing director and chief executive officer Anjani Sinha and 5 other top executives. Most global brokerages have downgraded Indian stocks, and yet Arvind Mayaram, the Economic Affairs Secretary, is surprised at the sharp reaction seen in markets. Mayaram said government doesn't want to impose capital controls and anybody in genuine need will be gladly allowed by the RBI to invest abroad. He, however, assured that the government has done its arithmetic and hopes to limit CAD to 3.7% of GDP and is confident that growth will be more than 5.5%. These which maintained its stable outlook on India's sovereign ratings a day earlier on Tuesday said depreciating rupee, India's twin deficits and weaker growth will not account for a downgrade as these are already factored in the current Baa3 sovereign rating, which is the lowest investment grade. Our recommendations, the technical calls for the day. We recommend buying Dena Bank above Rs 46 for the target price of Rs 51 with a stop loss placed at Rs 44. Derivative strategy for the day. Short Hexaware August future above Rs 115 for the target price of Rs 109 with a stop loss placed at Rs 118. That's all for today. Thank you.